Welcome back to another video. Today we are covering ICT's OTE or optimal trade entry. This is probably one of the easiest ICT concepts to grasp, understand, and utilize, and today we're going to go over how you can draw, analyze, and use OTE so you can start catching bigger risk to reward trades and ultimately stay in line with the trend so you're winning more trades and losing less. Alright, so what is OTE and how do we use OTE or the optimal trade entry? Well, OTE, as the name suggests, is the ideal or optimal entry place or location for a trade. And this is because OTE entries offer high risk to reward inside of probable bounce or rejection areas depending on if we're looking bullish or bearish. OTE, in my opinion, is also best used as the continuation entry technique, but it can be used as a good entry point if you're looking for a reversal play if it's following the initial shift in market structure, and we will get into both of those in the video. OTE is also finding and predicting a likely or probable bounce or rejection point of a range and is represented by three key levels or percentage points. These three levels are the 61.8 level, the 78.6 level, and the midpoint between those two levels, which is 70.2. Now, the best way to visualize this and put it on your chart is to come over here and find the Fibonacci retracement tool. And essentially what you're going to do is you're going to look for these settings right here. So you're going to want the 0, the 1, the 61.8, 78.6 level, and the 0.702 level. And for the most part, I'm going to take off these two levels here just because I like to have it a little bit cleaner on my chart. But for the purpose of explaining it so you can see where I'm keying this OTE level to, I will have them on for this video. Okay, so how do we actually draw OTE and utilize it on our charts? So first thing we're going to take a look at is a continuation example, and we're going to use this little drawing here on the right. So we're looking for a swing low and a swing high of a range, which creates a range. And if that's new to you, I'm not going to explain it in this video, but I am currently combining and working on a beginner's course for ICT where I can explain every single definition and way I interpret price and interpret ICT's concepts. So if this stuff is confusing to you or you want to learn that, make sure to keep an eye out for that because that will be coming out very shortly. With all that being said, we are going to take this swing low of the range because that's where we're going to mark our OTE from, and we're going to come all the way up here to our swing high, expecting for price to draw towards a higher time frame liquidity pool up here, for example. So if we're expecting a continuation to this high, we're essentially looking for price to pull back into the OTE or the optimal trade entry, and we're looking for a continuation to this high here and ultimately to this high up here, which is why we have such a good risk to reward with this strategy, because we can get involved around the OTE here with our stop loss below the swing low and ultimately targeting this high here, which should give you at least a 2-to-1, could be up to a 3-to-1, and then a higher price over here where your draw on liquidity is. Okay, so taking a look at the example here on the daily time frame, we can see we have these relative equal highs that are forming here. On Thursday's close, we created these relative equal highs. So we are looking for price to target those, especially since we have been on a trending environment to the upside here, and we're really not expecting those to be left that clean. So hopping down into a 15-minute time frame, we can take a look at what the market profile looks like, as well as if that aligns with our daily bias to give us our directional bias and ultimately what we're looking for our draw on liquidity to be. Okay, so now that we're here on the 15-minute time frame, I've marked out our Asian range just so we're all on the same page, as well as our 9:30 or equities open. So this is where we're looking for price to start moving. This is our New York session, and this is our high time frame level of liquidity I was mentioning earlier. As you can see, this is Thursday's high or previous day high as well. So we do have this classic buy market profile here, which follows our trend and our daily bias, as well as our weekly draw on liquidity, so we can expect price to start to run up to this high here. I am going to hop down onto the 5-minute here just to get a little bit cleaner price action, so we're not running too fast and we miss our entry. So as we can see here, we do end up creating this swing low here, which I'm going to just mark out here with this low, and we don't quite have a swing high yet, so we're going to see when we can form a swing high here, because we do want to get involved before this high gets taken. So we're just looking for retracements here. Still no swing high, still no swing high, and there's our swing high right here. So this candle forms our swing high after this candle closes, And we can see here that we do have the opportunity to get involved at OTE right away. For integrity of this strategy here, I'm going to give myself the worst entry possible, which is just at the very beginning of this OTE. And I would personally suggest always matching PD arrays with OTE. So for example, this order block here very well could offer a much better entry point. So if that's something that you are capable and can recognize, I highly suggest to use PD arrays inside of OTE to really give you that better risk to reward ratio and really get those sniper entries. But for the integrity of the strategy, we're going to take the worst entry here and give ourselves the least profitable trade. So we do get tagged in, probably not this trade because we want to see the swing high form. So we'll wait for one more candle to kind of tap in there, and we would have been invited into the trade right there. And ultimately, we're looking for this swing high here for about a 1 to 6 or a 1 to 1.6, and ultimately this high up here for about a 4 to 1 risk to reward ratio. Price does bounce around here a little bit, taps off that order block pretty nicely off the 702 and the 78.6 level there as well. So much better entry opportunities. We ultimately take out this high where you could have taken partials, move stops to break even, whatever your strategy might consist of. And then ultimately we do end up bouncing off of this fair value gap here and taking out that high for your 4 to 1 risk to reward trade. So I hope that's starting to make some sense here. We're looking for continuation models. And as we can see here, we marked out this swing low. You could have used this swing low here as well. They are pretty much the exact same. They're the exact same price, so it doesn't really matter in this case. I just used this one because it was the initial low before the high. So technically speaking, that's the correct low to use. So now that we understand this, as well as the importance and the power of adding PD arrays to your strategy, let's take a look at what the reversal strategy might look like. Okay, so now that we've gone over that 5-minute bullish example, let's take a look at the monthly time frame here. And I have marked out this monthly fair value gap, or this buy side imbalance, sell side inefficiency fair value gap right here in this blue box. So that is where we are expecting price to draw towards. We're going from external liquidity to internal here. And if that's a new concept to you, don't worry too much about what that means quite yet. As you can see here, we are on the weekly time frame now, and I'm just going to play some market structure here and see when we get a... Okay, so here's our shift in market structure right here. This low here actually is our initial shift in structure. If you recall at the beginning of the video, this is what a reversal play could potentially look like here. So this is our initial shift in structure after sweeping liquidity. And now we don't quite have a swing low confirmed yet. And now we do. So we can take our Fibonacci retracement from this swing high here down to this swing low right here. And we're going to extend that out in time. And as you can see, we would look to enter at some point inside of this OTE area here. I'm going to do the same thing I did last time, which is take the worst entry at the 618 level. We're looking for this low here, and then ultimately for price to come down into this fair value gap here. And we're going to take the worst exit there as well. There are relative equal lows here on the daily time frame as well. I'm not going to go down there because it will mess up the chart here. But essentially, we're looking to get involved in this OTE area. And the last thing that I want to point out is we do also have this order block here once again, which does happen to line up with OTE. So that could have been a better entry as well. But for the purpose of testing this strategy here, we're going to take the worst entry just to see how profitable we can be. So we do tap into the order block there, as well as tapping into my entry. So I'm involved in the trade here now, theoretically. We do end up rejecting that order block as well as the 70.2 level, which is quite nice there as well for confluence. We ultimately end up coming back down, taking out this low here. So now we have a break in structure here as well. So you could have taken partials here, maybe moved your stops to break even just like last time. It's really up to you, but we do have this breakdown here as well. So now you are looking for price to come down here, which it ultimately does, and it takes you out for your trade. So now you've made your profit. And just to keep this kind of consistent, I'm going to remove this OTE now and remove this trade, but want to show you that we do also have this leg down here for a continuation trade. So from this high here down to these lows here. So now we have a swing low here, and we're looking for price to come back up into this OTE area and then sell off. So I'm going to once again take my trade right off this area here. Stops would go above the high, and then we're looking for this low here, and we're going to say maybe this volume imbalance over here with the consequent encroachment of the fair value gap as our draw on liquidity. And I'm not going to go down into any other time frames, but I do know that there are some fair value gaps in here as well because I did take trades off of those much earlier in the week. This is a little bit old data now, but for the purpose of teaching it, it is still viable. And then I'd have been tagged in right here. So we get tagged in there. Price does not come up to the 70.2 level there, but it comes just a little bit short before taking out this low here. So now you could have had your partials there, maybe move your stops to break even. I think you guys are kind of getting the idea at this point. And then as we see, we actually don't come down and take that level yet, and price comes back up and I guess stops you out at break even if you didn't take partials there, or if you were looking for the consequent encroachment of that fair value gap, maybe you just took the volume imbalance there. Doesn't really matter. That's up for you to decide. But the low-hanging fruit objective is always the previous low that was here and here and here. And so I hope you guys are kind of getting the idea behind OTE now and how that works. If you do have any questions, make sure to let me know in the comment section down below, and I will do my best to answer those. And until next time.